So on April 23rd, YieldMax launched a new Bitcoin option income ETF, which is called YBIT, and it tracks BITO, or ProShare's Bitcoin Income ETF. So this is a weird loop, but let's take a look at it. I will do a deep dive into what YBIT does and if it's worth investing in it, or you should just stick with BITO, or neither. Okay, so first of all, let's take a look at what it does. So right now they have 400 outstanding shares, and assets under management is just under $8 million. So they started selling it around 20 bucks, and now it's a little less. So here we have the comparison of the two stocks. Let's reload it. The market just closed, so here we have the final numbers for today. Basically, in the couple of weeks that it's been trading, it has outperformed BITO, even with the crazy dividend that BITO has paid out. Actually, the payout was today, or yesterday, so $1.68. That was their largest payout. And YBIT is so new, they don't have any dividend history yet. So, and here's the dividend history for BITO. Okay, so should you buy YBIT? Let's take a look at how they make money. So for that, we will look at this Excel sheet. And so they sell, they have basically a synthetic position in BITO, and they sell puts and buy calls. And this is how they create a synthetic position, and on that they sell weekly covered calls. Okay, so for this week, expiring tomorrow, these are the covered calls they sold, and total per share income is 7.8 cents. So just about 8 cents per share. Okay, so one of them is in the money right now. That means they will lose a little bit of money to close it tomorrow if BITO closes above $25. Okay, so again, if we look here, it's slightly above, but they received 49, almost 50 cents per share. So if BITO is less than 25.49, basically they will not lose anything, and if it's below 25, they will actually make this money. The other two options most likely will expire worthless, so in my estimation they will actually make the full 8 cents for this week. Now I don't have the numbers for last week because again they've been trading for a couple of weeks now, and here is their position, their synthetic position, and this is very interesting. Right now they are way out of the money on both of these positions. So if they were to close today, let's adjust this price here to 25.35, they would lose $4.30 per share, and that's a lot. So yeah, so the NAV would immediately go to like $15 if they were to close today. But these positions, one expires in a week, so 5/17, and the other one expires in more than a month. Okay, and it's actually lower, so it is much. So these two positions, they're much safer than the two above. So the $29, yeah, that's a lot. And however, they did receive like $3.65 premium to sell this, and so if we subtract this from that, basically the loss will be around $4. Now, if BITO rises, then they will make money. However, I have a suspicion that it will not go to $29, so most likely they will lose money on the synthetic. So it's only like a week and basically 6 trading days away. I don't think it will go up to $29, and so YBIT will lose money on the synthetic. And their covered calls income is so small that it's completely negligible. Now again, I don't know the last week position, so maybe they made a little bit of money, but if we look back here, BITO was going down hard. So this is May 1st, that's last week. So probably they lost a lot of money last week also, and that's why you see the share price decline in YBIT over here from, let's look at price chart. So over here on April 29th, they were basically 1980, and then they dropped to 1830. And this is because the underlying dropped significantly. So they probably lost a lot of money on cover calls, and they had to pay it out. So that's not good. Okay, and this is the story with a lot of YieldMax funds. So if you look here, let's look at all the YieldMax funds. funds, and basically most of them are in the green in the last 12 months. However, the oldest one, which is Tesla, that's in the red, and that's if you bought 12 months ago and reinvested dividends. The price drop on Tesla in the last 12 months is 45% basically, and the prices fluctuate, but it is, short term. You could lose. You gotta be really careful with your entries into these funds, especially when they run up. For example, Misty, if you look over here at Misty, which also is Bitcoin related, it tracks MicroStrategy. Okay, so over here it was like $45 now, and it dropped to below like 27 at some point. So again, at its peak it was like 45, 44 something, and here it dropped to below 29, and at some point it was like 27. Now these are close prices, it's not intraday prices, but still it dropped pretty heavily. And so the same could happen to YBIT as well, because as you look over here, they sold, they created their largest position, which is like 2/3 of their position, and that's $29 strike, and they're way out of money on that. So if they were to close right now, they would lose a lot of money on it. So that's not good. So the question is, should you invest in YBIT or you should invest in BITO, or neither one of them? So tell you the truth, I am actually in BITO myself, and I bought right over here, guys. I bought at the very top. If you look at the price chart, I bought for $42. Okay, and I basically saw my shares plummet to like below $10, and I haven't sold a single share so far. Okay, I've seen them plummet. I was like, diamond hands, Bitcoin will come up eventually. And so I was looking at it, and it was painful, down 75%, or at some point like down 77%. And then like over here, somewhere over here, they started paying small dividend. If you look over here, their first dividend was 15 cents. I was like, great. Then it was 10 cents. I'm like, and I was reinvesting the dividends at first. So let's look, March 23rd. Let's look at the price on March 23rd. So it was already like, no, we gotta look over here. March 23rd, it was already around $17. Then it dropped again to 13. So I actually was not buying it over here. I was like, everything was going to crash, and the market was in the dumps. And then over here it started like all of the markets started going up, and ChatGPT became a big deal, and Nvidia started skyrocketing, and so all of the good stuff that happened last year. And so once I started reinvesting the dividends, and basically, long story short, my average now technically is $23. So my position is, it's in the green. But with the dividends reinvestment and also with selling call options, my actual total price is like below $14. So, and that's what's starting at 42, guys. What I can tell you is, right, as soon as I sold, or as soon as I bought BITO when it was launched, I actually sold the cover call way out in time. So like it was probably more than a year, and actually out of the money. And I collected about $18 per share in the premium. And so basically my cost at the time, once I collected the premium, was like $24. And then later, as those covered calls, as they dropped in price, I bought them back. So it wasn't actually a full $18. I think I paid like $3 or $4 to buy them back at the time, like once BITO dropped over here somewhere. And so I think, from here on, I basically watched my investment decline, and then they announced dividends, and slowly I started reaccumulating, and I was accumulating all the way like up to here, up to November. And on the price chart, let's take a look. Yeah, so I was reinvesting dividends up until December, and I stopped reinvesting dividends here, so I stopped buying it. But basically from March, so for a whole year, I was almost a full year, I was reinvesting the dividends and actually buying some more shares. And I also bought a couple of covered calls a year and a half out. So that was a $15 strike. And so now I can actually increase my position. So I paid like $2.50 per call, and they're $15 strikes. So basically my cost, if I exercise them today, would be $17.50. I could buy those shares today for 17.50. Now I'm still waiting a little bit. Maybe I will use the dividends and pay for the exercise. Anyway, so why am I telling you this whole story? Basically, what YBIT is doing is they're selling covered calls on BITO, okay, and then they are taking their fee, which is 1%. And guys, 1% is a very high fee, but this is actively managed fund. So anyway, so they're selling covered calls on BITO, and then they pay you distribution. So they're probably not going to pay distribution this month because they just started, and they will probably have a loss. If you look over here again, they'll probably have a loss on this position here, on this synthetic. So yeah, there's not much for them to pay. They probably took a loss last week because because the BITO price went down significantly, and so they're not going to pay this month. Next month they probably will, but I don't think it's going to be high unless Bitcoin starts to skyrocket and just go into the moon. All right, so let's go back here, and my point is, why would you buy YBIT and have somebody else sell covered calls for you, and you wouldn't even collect the dividends when you can actually spend the same money? Yeah, you would buy fewer shares. So this is a comparison tool. Let's go like 1 year out. Let's say we started 1 year ago, because this goes to the creation of actually no, never mind. So let's look over here, and we look at it as if it's been exactly 1 year. So if you bought into BITO a year ago, today you would be up 103%. Okay, and you would actually collect a ton of dividends. So this is with dividends right here, but again, they only really started paying dividends like late in the year, and more this year. You can see this was pretty insignificant, and basically it started over here. So you would have collected all these dividends right here from May, or maybe not even. So if you bought today, okay. Anyway, so you would double your money during this year and collect a lot of dividends, and you could also sell covered calls. Okay, so that's my point. Why have YieldMax sell covered calls for you when you can sell covered calls yourself and also collect the dividends? And dividends have become really juicy, like $1.68. Guys, that's like currently 68% forward yield. No, actually 79% forward. So almost 80% forward yield. That's insane. Now, my guess, it's not going to stay this high. I think it's going to go down below $1 for May. And then depending on the price of Bitcoin. And so the price of Bitcoin plays a huge role in this. And I want to show you, if you just compare BITO to the Bitcoin. So this is total return. You see, most of the time it actually was pretty even, until like over here when Bitcoin made another all-time high, 75,000 I think. And BITO also went almost there, almost to its all-time high, but then, you know, Bitcoin started going down, and so did BITO. But the difference is not huge. And if we look at the price of Bitcoin, so see what happened like 3 years ago, about this time. Bitcoin was like $64,000. And then it collapsed 50%. It went down to below 30. And so we might as well have something like this right now. Yes, we had the halving last month. However, you know, like right now Bitcoin is not looking super good. And if we look at 1 year chart, so we have support somewhere over here. So it's very realistic that we drop to $52,000 range. Very realistic. Will it go up from there? There's a good chance it will go up most likely, but a lot of people, like, you gotta sit on it, and you gotta wait for it to recover. Now, I waited 3 years for almost 3 years for my BITO position to basically come back to almost even. And if not the dividends, and if not the selling cover calls, I would be underwater right now. And if I didn't average down. So, and again, guys, 5 year chart, like, look, it went from 63 somewhere over here down to below 30. So again, 63 below 30, and this could happen this time around. And so BITO will likely have lower distribution going forward. until there's another big spike in the price of Bitcoin. But even over here, like look at February, it was just 35 cents, you know, and Bitcoin was already like 60 some thousand dollars. And then over here in April it was 70 some thousand dollars, and it was $1.14. Now how, I mean, in March, so in April I'm not sure how they made $1.68. Their positions, I could show you their positions. They have similar holdings to YBIT. Right here are the holdings. So you have the same for BITO, okay, but they sell futures on Bitcoin, and so you have to decipher those futures, and for that you have to go to SIBO website. Let me actually show you. So this is the official BITO website, and let's look at the holdings, and you can see here like you have to decipher this BTC M4 and the expiration date June, May 31st, BTC K4, and this is their position, but it doesn't really show you the price they paid or the strike price for that. And this is a code for the actual future contract, and I am not sure what it is. It's like super hard to track it. So I don't even bother. At least over here with BITO you can actually see the call, the put, you know, and the weekly calls. You can actually figure it out. But over there it's all like cryptic with BITO, so I'm not even I've tried it a couple times, but it's super difficult to figure it out. Here's their distributions. Long story short, it doesn't make sense to invest in or to buy YBIT from YieldMax, and already they're like super down, and probably they will lose a lot of money when their synthetic expires next week. But I just don't see it as a good investment, because with BITO you at least collect the dividend, you can reinvest it, or just keep it as cash, you know, buy gas or whatever, go to the movies, and then you can sell your own calls. So you can make your own call strategy with BITO, okay? And this is an option chain for March 24th. This is different strikes. So for example, let's say you bought today for 25.36, okay, and you can sell a what's the strike? Oh, this is all 26.50, so $1.14 higher, okay. So if you go a month out, you can collect, the spread is kind of wild here, but you can probably collect around $1 plus, because the May 31st you can easily collect like 85 cents, okay. So this bid, it's probably because it's after hours, and you see there's very little open interest for it. But even if you sell like 3 weeks out, okay, 3 weeks out, you can collect your own 82 cents. So that's like almost, that's like 3.5%, and if you multiply that by 12, so that's like 50% annual yield just from covered calls, and then you receive the dividends. And even if you get assigned, you're already making $1.14 on top of that, okay. So that's another 5%. So why would you invest in YieldMax when you can do this yourself and collect the dividends? And if you don't want to get assigned, go higher in strike, you know. I mean, BITO is very volatile. So let's say we go to June 7 and we select strike price, let's say 27.50. You can still collect like 50 some cents, like 60 cents, and you're $2 away. So that's almost 10%. Or you could go something like 28.50 or $3, that's more than 10%, and you can still collect a pretty respectable like 35 cents, you know, or more. And that's like less than 1%, but it's pretty safe, you know. And right, with YBIT, you're probably not gonna get anything close to this anytime soon. Now if Bitcoin crashes, then at least you protect your bottom line a little bit. Now you're not gonna get assigned. If Bitcoin crashes, then BITO will crash also. So again, we'll look over here. This is the BITO chart. Every time Bitcoin crashes, BITO also crashes. But you know, I've been on this ride for a while. I'm not worried. Even if Bitcoin goes down short term, eventually it will recover, just like we've seen over here, you know, from 64, 67, almost. Wow, I already forgot, this was less than 3 years ago, down to like 14 at some point, 15, 14. Yeah, that's a huge drop. But you know, I held through it, and my average now below $14. So yeah, basically, guys, if you are considering buying one or the other, I would definitely stick with BITO. This is not an investment advice. I'm just telling you what I think. I'm an investor in BITO. I will not be buying YBIT. I just don't like that. I mean, yeah, on Tesla you don't actually collect dividends. With BITO you do collect dividends, and you can sell your own options. So I just don't see a point in buying YBIT. Alright guys, thanks for watching. This is Leo with dripcalc.com, and this is our stock research tool that I'm using here. Now, a quick plug. Because these both are ETFs, so we have a lot more reports over here. Dividend, cash flows, free cash flow, earnings, all of that good stuff. But because these both are ETFs, obviously we don't have any of that, but you can compare, let's say, Google with, say, Apple. I can't even spell it. You can compare like different durations. You can even change the start here. So see over here. So Google is still not paying dividends. They just announced it. So soon this will be populated. And you can see total return over here for each one of them. So Apple did a lot better in the last 10 years. But here's the price chart for both. And we have EPS to PE ratio. So both of them on the same chart. You can look different periods. Free cash flow and free cash flow per share. So a lot of the different reports. So net income versus revenue, cash versus debt, and you can research all this stuff, most of the stocks. Okay, so you see they announced 20-cent dividend. So, but this is just an announcement. So once it goes ex-dividend, it will populate on this chart, and you will also see a dividend yield. So over here you can see the yield curve as well as the dividend amount. So they also increased their dividend by 1 cent, so their yield will go down because the price went up. So you can see the growth in dividends, the CAGR and price. Both of these are amazing companies, you know. Apple 1 year, it's actually pretty stagnant. So it's only up 6%, really? Let's look at 1 year. Oh wow, yeah, Apple pretty much didn't move, and Google just like. All right. So yeah, you can use this stock research tool. There's many more reports. There's also a single stock. And guys, because we just launched it, we offer a 30% discount. So I'm going to post it in a description to this video below, and also in the pinned comment. So thanks for watching, and I'll see you in the next video.